All right, guys, what is going on, dude? Oh my god. What's going on, man? Welcome to Wall Street Wednesday, baby. Welcome to Wall Street Wednesday, dog. Who do we got on here? 29. Nice. Chat is members only today, because as a member you get benefits. The chat is one of them, even though I open the chat sometimes. It is closed today, so if you're not a member, become one. All right. If you're not a member, become one. What's good? Naruto Mason 2020 Amin Jim Bob. What is poppin'? Jay and Mundo, Remy, Monkey. Who else is here? Who else is here, big dog? Where you guys at? Where are you guys at? What's good, Lee Bright? Did you take anything today, Lee Bright? I did not, and I'm glad I didn't. I did not care for today. I like this up in here, but right around 10:40, I wasn't watching the 1 minute right here. So I probably wouldn't have traded that anyway, to be honest with you. Even though this is beautiful, I still probably wouldn't have traded that 80 level there too. Damn, we had a lot of confluence in there. So let's see if we can actually get this run below 500, 18,500. Let's see if we can get that. This looks pretty primed to do that. So we'll take a look. No trade today. Yeah, no trade for me either. No new trades, at least. It was good. Beethoven, Akinola, Bruce, Tordy, Kieran, what's going on? Yeah, I'll leave it here for a minute. That way we can see if we actually get that run lower. But yeah, not a day that I like. It's not always about what you like, but you know, you don't have to trade every day. You only need 1 or 2 good setups a week. You know what I mean? So for me, that ain't today, at least as of now. But you know, which is a mindset thing, and that's kind of what I want to get into as well. What's good, Manuel? What's good, Leon? So I got a question from someone. I don't know if it was one of you in the chat, but I told this person I would answer the question on stream. So they said, hold on, I gotta drink my coffee. I had some snacks before this, and I shouldn't have done that. But I was starving, bro. I have not eaten today. You know what I mean? And I worked out like a biatch yesterday. I'm like kind of sore, you know? But I'm gonna do it again today, chat. I'm gonna do it again today. What's good, Marshall? I did like 60 something push-ups yesterday, man. Which is a lot for someone who hasn't done that many in a while. At least within like a 30-minute span. Your boy was pumping iron yesterday in the garage. I was killing it. All right. So anyway, that doesn't have to do with anything, but I just thought you should know. All right. Okay. Anyway, so let's get to it. This person asked, how do you deal with it when your subconscious mind starts to focus on winning and thinking that the next trade is going to win? How to rebalance that? Well, if your subconscious mind is like an imbalance, you know, needs a rebalance, then we'll have to fix that. What's good, Flacco? But I'll tell you this, man. This is my honest opinion, okay? When you start to get into the realm of consciousness, subconscious mind, just your whole subconscious in general, that is also a path that you got to be very careful on, because there's a lot of pseudoscience out there. There's a lot of beliefs. I got notifications on and messages pop up and people send me funny shit. You start to get into pseudoscience. You start to get into beliefs that cannot be proven or disproven. And that's kind of like my stance on the law of attraction. There's a video on YouTube that really helps explain the law of attraction and basically why it's bullshit. And I know some of you might not want to hear that. I actually lost followers recently on my Instagram, but I don't care. Okay, I really don't. But just be careful when you get into subconscious and all that kind of shit. So I do have one book, The Power of Your Subconscious Mind by Joseph Murphy. And I think I read about a third of that book. And I didn't really care for it. So the problem that I had is when I'm especially like with disciplined trading and trading in the zone, I get a lot of value from it because I know what he's referring to. I know what he's talking about. And because I'm in my 11th year, I have the last 10 years to draw on to say, okay, I know what he's talking about here. This is how I can fix that, you know, so on and so forth. So I totally get it. It makes all the sense in the world. Right? Except for the part, again, I respect Mark Douglas and Paulo Webb more than anyone else in the industry. But I just don't agree with him saying that traders move the market, because we don't. Other than that, everything else is golden. Okay? So I don't even think it's the subconscious mind that's, I guess, trying to bring up, hey, you need to win. Okay? You don't win by focusing on winning. You win by focusing on the process. You don't focus on the outcome. You focus on the process. Okay? And yeah, Mason, I'm just not a fan of Joe Dispenza. I mean, I have a lot of friends. I have a lot of even like students of mine, and like even ex-students of mine that enjoyed Joe Dispenza. Me personally, I just didn't. You know, he's one of the ones that are along the lines of like pseudoscience type shit. You know, that's just my personal preference. You might love Joe Dispenza. You might be like, oh man, John, for real, not my guy, not my boy. It's just not for me, bro. It's just not for me. Okay. If you're subconscious, right? If you're trying to focus on winning, you know, I got to win the next trade. I got to win this trade. You are committing multiple thinking errors. It's not the right way to think. It's just not the right way. Okay. What's good, Shay? I don't know why, as individuals, we do this, because every person is different. Maybe you got a bill coming up. You know, maybe you were, I don't know, bullied as a kid and you want to show people success. Hey, I'm with you on that. You know what I mean? I feel you on that. I love my Corvette, baby. I love it. Victoria, that's her name, which is Latin for victorious. You know what I mean? So I'm with you there. You know, proving people wrong kind of thing. I 100% understand that. But that doesn't mean every trade has to be a winner. Because, as we know from the coin flip exercise, that is not the case. $5.59. They shorted in here. 59. Oh, Jesus. They shorted at the 75% level. Mm. I could see us sweeping these highs to go lower. I could definitely see that. But I'm not going to trade this. I don't even like how we made all these lows in here either. That's wild to me. I am going to get a custom plate, Mason. I'm going to order it pretty soon. Was good, H. Okay. So drop some ones in the chat if you guys are with me so far. You don't win by focusing on winning. You win by focusing on the process. Winning is a byproduct. Making money is a byproduct. Getting in shape is a byproduct. Okay? Building wealth is a byproduct. Passing a combine, passing a challenge is a byproduct of creating a plan and following the plan either perfectly or with as much discipline as you possibly can. Because you can stumble your way to success. You can kind of, you know, you can afford a couple mistakes here and there as long as they're not, you know, if you don't blow your fucking account in one trade. You know what I mean? You're going to take losses on the journey. So you can stumble a little bit, but, you know, again, refer to the equity curve from the coin flip exercise, right? That was the process. Flip it, heads or tails. Flip it, heads or tails. And that's all you did. That's all you had to do over and over and over again, right? That was the process. That's why I asked you if at a certain point you got bored with it. Because most of you probably did. After 20 or 30 flips, especially around like 70 or 80, you're like, hot damn, can I just get this done? You're like, all right, I'm in the 90s. All right, the final 10, let's do this shit. You're just trying to get rid of it. You know what I mean? That was the point. You were focused on the process. Then you could go back and look at the outcome. Right? So that's my answer to that. Don't focus on winning. Focus on following the rules that you have for yourself. And I know that sounds a little bit vague. And that's one thing I don't like about books either. When people are very vague. But the rules that I've given you rules. Market Maker Models Masterclass, 48 Laws of Trading. I told you, the lazy trader, you could enter at 25%, stop at the high, aiming for the lows. That's a 1 to 3. That's following the process. That's following the rules. You know what I mean? We went over silver yesterday, or in the market review, I went over silver last night. And I told you what? I told you where I entered, where the stop loss was, based on rules that I've already taught you. So the answer is not, how can I win the next trade? The answer is, how can I follow my process over the next 10 trades? That's how you win. All right? You guys good with that? Let me see. Oh, first time. Is this your first stream, Brian? I try to follow the rules, but revenge trading. Okay. Look, every mistake that you can think of, I've done it. Trading without a stop loss, I've done it. Holding losers, I've done it. Cutting winners short, I've done it. Okay. Every rule that you could probably imagine, I've broken. Okay. So we revenge trade because we're trying to get back at the market. And the problem with that is the market doesn't know who you are and doesn't care about you. And according to Mark Douglas, you're not getting back at the market. You're just getting back at yourself. Okay. You will stop revenge trading when you understand and internalize that by revenge trading, you are not acting in your best interest. Does that make sense? If we were to make a list, like a T-chart, basically, like a dichotomy of control kind of exercise, right? And on one side, we wrote down what a good trader would do, what a professional trader would do. And on the flip side, what the unprofessional would do, what the retard would do, basically, right? You got pros and you got retard, okay? And a lot of the times in the beginning and intermediate, we see ourselves on the retard side. Revenge trading, trading without a stop loss, over leveraging, stuff like that. So when you, again, when you understand and you internalize it, you will stop doing that. You will realize, okay, I just took a loss. The old me right now would want to re-enter and revenge trade. But I know based on the last, I don't know how many times you revenge traded, but I can guarantee you anywhere from 60 to 90% of the time, you don't get your money back. You take another loss. Am I wrong, chat? You let me know. Out of all the time you know you revenge traded, not re-entered with different conditions. That's different. But specifically revenge trading, how did that work for you? More times than it didn't? Or did it not work as much as you thought? Because I'm willing to put money behind it that between 6 to maybe 9 times out of 10, you revenge traded and it fucked you even more. Excuse my language. You were worse off after you revenge traded. Maybe it worked a couple times. Maybe once or twice you're like, no, I revenge traded. I got my money back plus more. And that was it. Right. But compare how many times it worked for you to how many times it didn't. And I'm willing to bet it didn't work for you as much as it did. I agree, Mason. I agree. You want another gem? Books should not be read. They should be studied. How about that? For the disciplined trader, that book should not be read. It should be studied. Meaning, reading a paragraph again, reading a page again, reading a whole chapter again, writing down notes, highlighting, taking notes, not just reading it all the way through just to say that you've read it. You will not soak in as much information. But if you study it, you will. So how about that? There's a one-liner for you. Books should not be read. They should be studied. Was good, Big James. And that's my point, Lee, right? Most times, it might have worked here and there, willy-nilly, randomly. But more times than not, it probably didn't work. So now that you have experience, Lee, right? And a lot of you do. Flacco's a gold member or a gold sniper, Naruto, Adrian, Big James. You know, a lot of you have experience, at least a year, right? And so you know, based on your history, like, yeah, John, I don't remember every time I revenge traded because, you know, we've taken hundreds of or probably even thousands of trades, right? But it's like, but I just remember, generally speaking, it only worked a few times and it didn't work most of the time. So when you see that, you go, yeah, why would you keep doing that then? Thank you, Brian. I mean, I don't know if I'm the best. I mean, I can't even get people to like the fucking stream. You know what I mean? But I do my best. I try my best. I try to give you guys the juice. You know what I mean? I don't get much love back, but you know, I'm gonna do it anyway. I'm gonna be here whether you like the stream or not. I'm gonna be here whether you follow me on Instagram or not. You know what I mean? So anyway. Thank you, Brian. Brian gets a gold star today. Everyone else, just unsubscribe. I don't know. Let me see. Adrian said, I noticed too, I got better once I got tired of my shit. That's one way of putting it. Like revenge trading or over leveraging or any other thing. Right. Because Adrian, you looked at your results and you went, I see when I did well. And then I see when I went retard mode. And I got to end this retard mode. Right. So we simultaneously want to keep doing what's working and we want to stop doing what's not working to the highest degree that we can. You can't end all your mistakes. You can't end taking losing trades. You know, that's where it kind of comes back a little bit. You know, it's just like being human, right? We try to be perfect. We never will be, but we strive in that direction. Like I said, I've been trading for more than 2 years now, and these mistakes are just part of the journey that is supposed to build you, not break you. Well, it's not supposed to break you, but it does break a lot of people. Because if they give up their money too fast and they don't have any money to redeposit, you're fucking done. You're done. People quit. And they think it's, you know, I say this all the time, you know, I'm a scam, fucking trading is a scam, Forex is a scam, everything's a scam. But you still go to your job. Whatever. Right? I'm not going to try and change your belief system, but people believe weird shit, okay? I mean, just look up the flying spaghetti monster, okay? That's a real religion. People wear strainers on their head at the DMV because it's a religion. They believe in the flying spaghetti monster. People believe in weird shit, man. You can Google that, bro. Look it up. Is that a 1, 2, 3 on NQ? Bro, there's 1, 2, 3s all over the fucking place. Literally. There's some in here. There's some in here. There's some here. Like, bro, I would not touch this. If I had to pick a direction, though, I'd still be short. Powell about to speak. 18,500, dog. We got to take it. We got to take it, bro. We have to. Right? Or the market is wrong. Market's never wrong, chat. The market is never wrong. It's you who's wrong. Or it's me who's wrong. Blanco said, I got stopped out in profit. Ain't no way. There is a way, dog. There is a way. Didn't I tell you earlier I'd want to see if these highs get swept before going lower? I did. I'd want to see this one. That's like our lunch high to me. I would want to see that before going lower. But again, I don't make the rules. I don't control the market. Sometimes as much as it looks like it, I don't. Okay? I just try to figure out what the fuck is going on. Can we get 18.5, baby? Can we get 18.5? Which is right there. Boom! Biatch! You do not win by focusing on winning. I don't care if Powell's speaking or not. I pointed out those lows this morning, not even knowing that he was speaking today. Why? Because, my friends, these lows down here, and I told you earlier on this rally that we have an engineered low. Or I said it looks like an engineered low. That one's right there. That's a low prior to lows. That's engineered. We came higher, swept all this, and then went lower. You see how hard that is? Man. Man, John is fucking accurate as fuck. Look at AUD. Yo, mom, come look at this guy. He told us yesterday and the day before, he told us about 63.90 on Australian dollar. What the fuck? How does he do it? Because it's the same shit, chat. It's the same shit. Equal highs, equal lows. Find the liquidity, trade in that direction. How hard is that to understand? Now, mind you, we really didn't run that by a lot. We went like 1 pip above that. We went fucking 1 pip above it. I don't give a shit. We still got that level. It's the same shit, chat. It's the same shit. Look at that. ES, same thing. Look at those lows. Boom. Got them. What about Dow? Not the same lows, slightly lower, but still London low. Boom, just took it. How hard is that? How hard, chat? Should have traded it, huh? But again, I told you I'm not always trying to take a fucking trade, okay? Again, how can I do this? All right. Even if I don't trade it, again, I'm not in it. It's shit. If anything, I'm losing money because I'm still long on stock. So it's fine. It's not a big deal. Okay. Because I'm still in from a very good position. I'm not even worried about it. But how do you focus on being in sync with the market? You follow the rules. You follow the framework, big dog. You follow the framework. What is the framework here? Now, mind you, I don't look at it like this specifically because it's not as clean as I would have liked it. But this in itself is pretty much a sell model. It's a shitty one just because of the volatility here. But look what we did. We gapped down yesterday. Right? Traded lower. This is consolidation. We ran that high and traded almost halfway into that gap. Can you see it? Can you see it? Original consolidation. Manipulation. See that? It's just a very, very distorted sell model. Okay. We traded lower, engineered low, came back up, swept those highs. Basically, second leg of distribution. Real difficult. Okay. Now I would also look at it this way too. I didn't plan on getting into this today, but it's been a while since I told you about this. Everything is fractal. Okay. Everything is fractal. What happens on smaller time frames happens on higher time frames and medium time frames. Okay. Now I've showed you this before. It's Brian's first stream, and I'm sure some of you have probably forgot this by now. But I'm here to remind you. You can have concepts within concepts, right? You can have an imbalance within a mitigation, right? You could have a mitigation playing off of a higher time frame mitigation. I've shown you that too. You can have a market maker model inside of a market maker model. Okay. A lot of people don't teach that. A lot of people don't teach that. All right. I know you're used to it by now. John, you always teach shit nobody teaches about. I know. It's all good. Consolidation, or if you wanted to include this whole thing here, that's fine, right? Whether it be this or like all of this, I really don't care. But that run this morning, okay, right, almost at 10:30, when we swept all those highs, this can be consolidation, this can be accumulation, that's manipulation, low risk short, inversion model, low risk short, traded lower, right? Accumulation becomes what on the right side of the curve? If this is our lowest low and that's our highest high of accumulation, right? What does that become? The law of the return. Accumulation becomes what? Distribution. See that? Right in here. Right in here again. Again, I didn't like that. I don't like trading that way personally, but I don't make the rules. Okay. I don't make the rules. I don't control price, but it just goes to show it's the same shit over and over again. This run here, high, low, higher, high, that took all that liquidity, right? What does that make this? Kind of a shitty version of a what? Mitigation right there. Look at that. So the concepts still work. Oh man, these markets. Oh man, this is bullshit. It's not bullshit. You just can't trade. And that's okay to admit. That's okay. Now, if you're a mentor and you can't trade, that's fucked. That's fucked. The markets are never like really shitty, okay? Now, sometimes I might think, but that's when I tell you, that's my opinion. I don't like this, or I don't like that. You know, maybe you can find something. I don't think it's an easy read. That's what I said in the Discord, right? I don't think it's an easy read. That doesn't mean unreadable. It just means it's not an easy read for me. When it's easy, I love those trades. When it's easy, just like silver, just like Australian dollar, both of those hit easy. You see how easy that was? This, to me, was a bit more difficult. I told you about the engineered low. We ended up rallying a lot higher than I thought we would, and we swept all of that. And then, you know, this was its own sell model. Okay, here, I'll just delete everything. Okay, what I'm saying is your larger model is here. Is pretty much this. Okay, but again, it's distorted based on time, meaning that we ran higher and we kind of like slowly drifted lower. So this is what I mean by distortion. We went up fast and drifted a little bit lower. So it's a little weird to look at, but that doesn't disqualify the sell model. Okay, so I'm going to leave that there as a, we're going to make it thick. All right, for a larger one. What I'm saying is here is a smaller one, and we'll make it thin and red to differentiate. Okay, drop some twos in the chat if you guys are understanding. Large, I don't want to say time frame, but a larger size of a sell model, and then on a smaller time frame within that larger model, we have a smaller consolidation, accumulation, manipulation, low risk short. Accumulation becomes distribution as first leg, second leg lower. Yeah, and then, yeah, I think that's what we called it, Mason, like when we were just fucking around that one time on YouTube, right? It's like an inception MMXM, you know what I mean? But fractal's honestly the right word, but that's what it looks like. It's a sell model within a sell model. So, yeah. Beautiful. Beautiful, beautiful, beautiful. Okay? Now let me answer this for Brian, okay? Because this is actually a very important piece of information. Okay? Now, again, a lot of people don't really teach this either. I'm not most people, am I? All right. By itself, okay? Let me actually clip this. All right, because this people will be able to reference this later. All right. Let's imagine this as Monday. Okay? Let's say this is Monday's price action. It opened, it rallied, and it traded lower. Right? So this would be what? Monday's high. Okay? Monday's high. No problem. Like, let's say it's a Tuesday or a Wednesday. Monday's high would be important. Okay? If price, okay, happens to, you know, do some dilly-dallying, whatever, and then it stops just prior to that, okay, it stops short of Monday's high and then trades lower in this example. This is an engineered high. That's what I call it. Some people might have other names for it. I name things for what they are. I try not to put, you know, too much pizzazz on shit, I guess. You know, there's no John Fibonacci model. Okay. I don't put my name on a model because that's stupid. Right? Mitigation model because it's a mitigation. Imbalance model because it's an imbalance. The Judas model because it betrays lows, right? Judas betrayed Jesus for 30 pieces of silver, 3 lower lows or 3 higher highs, right? To reverse, basically. That's why it's called a Judas model. Okay. This high stopping short of Monday's high and the market reversing, the reason that I call this an engineered high is because that's what it is. The market stopped shy on purpose to reverse in order to build liquidity. Okay, that's the purpose. That is its purpose. Because why? Because on a smaller time frame, from that high, and let's say obviously that market sells off. Okay. Right? That market sells off. So in this, right, somebody is short. Somebody's short. So where do stops go? Above the high or at the high and above it. Short-term traders are going to put liquidity or their stops here, which is going to build liquidity like in the short term, right? The day traders, the scalpers, you know, day traders, okay? People who have a little bit of a higher time frame perspective are going to keep their stop at Monday's high from anyone that was short yesterday and is somehow still in the trade, okay? So there's going to be sellers, right? Whoever's short is going to have a stop loss at the high and at Monday's high. And then the traders who want to buy breakouts are going to have buy stops at the high and buy stops at Monday's high. The context of the orders are different, but it's still buy stops at the end of the day. So traders are still going to want to buy the market when it is at the high or above it. Okay. So in what would happen in this case for the engineered high is the market would probably come down, take some internal lows, right? Internal range liquidity, and then run that bitch. Does that make sense? So in this, again, hypothetical example, I've called this out dozens of times over the years though, for you, by the way. When we have an engineered high, it's building liquidity to run it later. Okay. That's how smart money works. That's how smart money works. That's how these ideas continue to work over and over again. Now, it doesn't have to just be Monday's high. What we can do as well is instead of having that, because I don't really trust that the same way that I trust, let's say, for example, equal highs. Okay. Then it's the same thing. Equal highs or even a slightly lower high for low resistant highs, right? This is all in the free beginner series. Those highs, right? Those are targets. If we don't get that, if we stop shy and trade lower, it's the same thing. It's engineering a high to build liquidity to run it later. So this idea works the same this way as well. It's the same shit for the other side. We have some lows. We stop short of the lows, run it higher to sweep some highs before trading lower down to the lows. And that, my friends, is what you saw today. Here. Oh, it's selling off like a biatch. That's what you see here. Okay, at 9 o'clock. 9 o'clock, What's 9 o'clock? What is that? Not just to open a new hour, but 8:30 to 9 is what? Opening range. So where's your opening range? High, boom, right there. Where's your opening range? Low, boom, right there. Well, if it's 8:55 and then 9 o'clock opens, I guess technically it'd be like right there. But if you want to use, I guess, the open of 9 o'clock, that would, I guess, work as well. But if you don't want to use that, we could still use the equities open high. Runs that and then runs to the low. But you see why? Look at that. Look how perfect that is. The low's here. Oh, we're going to run the lows. Nope. Reverse it higher. Absorb anyone trying to short, right? Oh, I'm short. Stop loss is here. Taken. Anyone who was trading pre-market or let's say in London who's short, where their stop's going to go? Recent high or recent highs. There's some equal highs back here. It takes all of that and then goes. And so this is one of the, I don't want to say schematics, but this is one of the, I guess it is a schematic. This repeats all the time. It may not be like every day, and it's not always going to be this clean, but that's how it works. They're going to get you to think it's going one way. Run the liquidity. Smart money is shorting this. They're shorting above this high. They're shorting above these highs. Because why? Traders are willing to buy that. Because dumbass traders buy at highs or buy above highs. And that's why almost 2 years ago, I made that video, top 10 smart money trading rules. And one of them is I don't buy above old highs. Okay? And I don't short below old lows. This is why. So that's what an engineered low is. It is a low that stops prior to a liquidity pool to help generate liquidity. There's already liquidity here from London, but it has to build liquidity in the equities session. That's where most of the liquidity is anyway, which is 8:30. The first 30 minutes is when majority of the volume for the day comes in. So the majority of the volume here, okay, once the market, I guess, is outside of that, the first 30-minute window, now we have liquidity at the low and at the high, right? That's not new. I've taught you this for a long time. The high is high and the low is low in the first 30 minutes. When one of either the high or the low is in conjunction with a pool of liquidity, that's just even better. Generate liquidity, generate more liquidity, run it higher, fade the idiots who buy above old highs. Smart money is going to short that and then run that bitch lower. Look at that. Look how we traded lower versus trading higher. Massively lower, a little bit higher. Where did price go up to, pause, and turn on a dime? What I showed you earlier before I started the recording. The mitigation, right? That literally is the function of a mitigation. That video is almost 2 years old now. Because why? When the market traded lower here, okay, anyone who has half a fucking brain, meaning like smart money, goes, oh shit, bro, we just took buy stops, ran it lower, and we've got some lows down here. Okay, well, if I'm long, I need to get the fuck out. I need to get out if I'm long. That's the purpose of that. They can get out long a little bit on the way up to mitigate wherever they're at. They mitigate those positions. The market doesn't mitigate. Positions mitigate. If I'm long from down here, or if I'm long from in here, and then the market goes to shit, okay, I need to get out of my longs at a favorable price or near a favorable price before it collapses and I get my ass handed to me. And that's why my mitigation model just is absurd. Look at it. It's not my model, you know what I mean? But it is a phenomenon, okay? that is what? An imbalance within a mitigation. That's fucking perfect. Right? I don't even know how I didn't see that earlier, to be honest with you, but it's okay. That's okay. That's what an engineered low is. All right? Drop some threes in the chat if that was a good explanation. I feel like that was a pretty good one. I felt like some of you learned some shit today. Anything that I ever teach you, you can go back. You can go back and you can study on your own. Okay? Imagine holding silver. Imagine holding silver. We went over this yesterday. Or what's today? Wednesday? We on Tuesday. Maybe it was Monday. Maybe it was both Monday and Tuesday. I don't know. Who fucking knows? But I told you what? This low right here, you see that? That is also an engineered low. Now, those used to be equal. I don't know what happened. I guess on oh, that reminds me. Oh yeah, we got to go over that. We got to go over that. I almost forgot. Y'all almost let me forget. Y'all almost let me forget. Okay, watch this. That's what I'm talking about. Okay. Can everybody see this? These two lows here, right? Original consolidation. Or, no, sorry. The original consolidation's up here. My bad. Lows swept. But look what happened before we swept it. Look at this. See that? That short-term low, and it rallied, even though it's a 5-minute time frame, that short-term low stopped shy of that liquidity pool. Hush said, I realized I get stopped out a lot within the first 30 minutes. Well, maybe let's not trade the first 30 minutes then. Not financial advice. That short-term low here is shy of that. So that little rally here is to try and get traders thinking that the low is set. Then it runs. Okay? Now, this is what's going to knock your socks off. Because why would I have the confidence to say that this was a buy model before it panned out? And then I didn't tell you to hold it. And for the trade that I took, I got out before the target because of the rules. And then on the demo side, I even got out at the highs. But you notice this big ass run we got here. And I told you this a few hours ago. I said, imagine holding a contract in silver. I told you to look at a daily chart, I think. Or I told you to look at it. If I didn't tell you to look at it at a daily chart, I'm 100% an asshole. But what I wanted you to look at was a daily time frame. What do you think that purple box was? That. Right here. See that? Inverted mitigation on the daily. You didn't see that, did you? You didn't do your top-down analysis, did you? These two down candles here, they were utilized there. Okay? We traded through that into it here. And then inside of that inverted mitigation, basically on the daily, that's why you see this. So we got a market maker buy model based off of something on a higher time frame. You didn't see that, did you? It's okay, chat. You can be honest. You can lie to me, but you can't lie to yourself. You know what I mean? And trust me, I didn't used to see the shit either. But how can you trust the smaller time frame setups when they're coming off of something on a larger time frame? Remember Simba? Remember? What was it? Simba and Mufasa. Your market maker buy model on a small time frame, that's Simba. That's your little lion cub who's kind of like rawr, right? Your higher time frame, that's Mufasa. That's the lion that runs the whole jungle. You understand? So you can't just focus on the small setups, right? They work, obviously, but to get confidence, not just based on liquidity, it also comes from the higher time frame. So I thought that was pretty cool and worth noting. But anyway, this whole point of recording the clip was for understanding engineered lows and engineered highs. This may not be like a good one, but something like this probably would be right here. Because again, just like the explanation, on the future side, these were equal highs, okay? And if this is a buy model, it's going to reach above the highs. But what does it do prior to that? It stops short and trades lower to take stops, right? That's the engineered high right there, in my opinion. So it stops short of the liquidity pool, trades lower for liquidity and then imbalance, and then runs for that liquidity. Okay. So hopefully that made some sense to you, but that's how I view. Oh Christ, 3.5%. Look at that shit. We are selling off, big fella. I'm not worried at the moment, but I think if we get back down to like the 17,600s, especially like 17K, I'd be a little bit worried. But I'm still cooling for right now. I'm chilling for right now. But anyway, that'll be it. Brian, top-down analysis is simply going from the higher time frames down to the lower. That's all it is. Go to the weekly, mark it up. Go to the daily, mark it up. Go to the 1 hour or the 15-minute, mark it up. Then go to your 15 and 1. Now, ideally, on a higher time frame, you want to mark up your seasonality, your most bullish months, your most bearish months. And on an intraday time frame, ideally, you want to mark up the times. For the indices, it's a lot off the top of my head, but basically on an intraday basis, it'd be the highest high and the lowest low in the first 30 minutes as your equity open liquidity, London's high and low for London liquidity, previous day high and low for obviously liquidity, and, you know, open of the hour, shit like that, and relative strength. So it is a lot of work to do. It is a lot of analysis. That's why I can be on the charts all day long, because there's pretty much unlimited amounts of shit to mark up. But how do you prevent analysis paralysis? Before I answer that, let me see what you can put in the chat. How do you prevent analysis paralysis? What do you think the answer to that is, chat? Before I give you my version, what do you think it is? How would you prevent analysis paralysis? A little 15-minute imbalance right there too. Okay, those lows, that low stopped shy, ran the highs, traded lower, imbalance on the way, boom, reaches into it right there before we sold off. So not that difficult. Analysis is the easiest part. Pressing buttons, holding trades is more difficult, I would say, for most people. But that's why we work on psychology as well, which is pretty much what Q2 is all about. The disciplined trader, trading in the zone, shit like that. Because analysis and your edge is only one of the 3 pillars to trading success. So Cameron said, by understanding what you're looking at, well, what you're looking for, meaning your trade plan. You know, your trade plan could be, I want low risk buys and low risk shorts. Or some of you might, well, I want second leg of accumulation or distribution. You know what I mean? And I agree, Naruto. I kind of gave you that one with the watermark. It's not up there, but I agree with what you're saying. And yeah, Edgar, that's what I'm asking. What do you think would prevent analysis paralysis? Because I can guarantee you that's what's going to happen. When you mark up a bunch of shit. Well, the daily is this, but the short time frame is that, and you know, this, that, and a third, and there's conflicting bias, and I'm near 50%, and I don't know what to do. Big James just said, fuck it. Just said, well, just step away from the charts. I mean, I guess that's one way to avoid it, but that doesn't fix it. I agree with Cameron and Art, though. You will overcome analysis paralysis when you only trade what you're looking for. Okay? I just gave you an example a few seconds ago. An example could be find the liquidity and trade in that direction. If that's part of your plan, okay, then find the liquidity and trade in that direction. All right, John, well, what if the market's rallying, though? Well, if it's rallying, I mean, you could buy it, I guess, but that would go against your trade plan. If your trade plan is find liquidity and trade in that direction, then wait for highs to get swept and then trade, right? And that's why I pointed out that inversion earlier today, that one way up here. Because that quite literally was the inversion model. It wasn't the Judas model. Not really. But it was the inversion model. It's the last imbalance on the way to a liquidity sweep that becomes inverted. It's inverted right here. At 1038, it closes below it. At 1039, that's the earliest available entry that you can take. And look at that. That would have put you in at the high of the day. Look at that. That was way up here. Look at where we're at. That's nasty, right? So why would it matter if you saw like other shit on a different time frame? When this time frame was telling you, hey, you're in a short term or you're in like a smaller time frame market maker sell model inside of a much larger time frame market maker sell model. So if you're in a sell model or a potential sell model, why the fuck would you long? So if you're not going to long, right? Or if you think you could long, maybe you saw a long in here. I don't know how you would see that, but if you did, that's fine. But that previous long is going to be a short later. You know what I mean? So you're using a filter, you're using a system, and you're saying, okay, I got all this information, but this is what I'm focused on. Where are the opportunities? That's the question, right? You go, I got all this information, but the opportunity is this. That's what I'm saying. The opportunity is the low risk short, or the inversion model, or the mitigation model, or a really late short-term short, like a scalp. But honestly, I don't even know what the entry would have been in here. In here, I have no clue. I really don't. I told you I wanted to see all these swept, and only a couple of them were. So, you know, I wasn't entirely right in the highs that we would take, but I was still right in telling you that we would probably go lower because of the engineered low, which I just got done explaining. So does that make sense, chat? Drop some 4s in the chat if that makes sense. And yeah, Lee Bright, always follow the big picture. Yeah, Cameron, where do your eyes go? My shit is like a magnet. As soon as I see a chart, where's the highs? Where's the lows? Are they equal or close to it? And then the next thing would probably be, what time is it? Because honestly, the time is the most important thing when it comes to entering like a trade. But it has to be, to me, it has to be in the direction of liquidity. So I need to find a liquidity, and then I need to check the time. But you'd be right. Which one should I start? Disciplined trader or trading in the zone? Okay, so a little bit of history here. A little bit of history lesson for you. The disciplined trader came out first. I think it was in 1990. And then many years later, Mark basically said we thought it was enough, and it wasn't. So I think trading in the zone came out in 2000. So it came out about 10 years later. So the disciplined trader came out first. Trading in the zone came out after that. Which is interesting because trading in the zone is the one that got the most famous. But that was actually a follow-up. So I would read it in the way that it was published. So the disciplined trader I'd read first. Trading in the zone I'd read second. But that's just me. That's just me. But good question though. Yeah, I agree, Cameron. Liquidity manipulation, find the liquidity, wait for the manipulation in the opposing direction. Exactly. It's hard to do though in the beginning because you're basically, you want to be short, but you're watching the market rally and it feels wrong. It's like driving on the opposite side of the road. You know, other cars are coming this way, right? So it's like, it's awkward. But in trading, that's the best way to do it. Right? Shorting above old highs using a mitigation model, either one of those would have put you at the high of the day. You're going to tell me you have a system that's better than that? Yeah, fuck you. No, you don't. No, you don't. Shorting at the high of the day, you can't beat that. You can't. Can't beat it. On a down day like this, you can't beat that. You can't beat that. I dare you to try. I fucking dare you to try. Yeah, John, I got something better than shorting at the high of the day. Sure you do. Sure you do. Yeah, I agree with that, Mason. If you really try to find a trade, you'll find something that probably isn't there. Yeah. Illusions and distortions. Yep. That's why I comment on a lot of people's Twitter and a lot of people's reels because they're illusions and distortions, right? Like this one dude, I lost $4,000. So I'm like, oh, I gotta watch this shit. He's like, yeah, I shorted Nasdaq and then I went break even and I got hit out break even and then the market went lower. It's like, whoa, whoa, whoa. Hold the fuck on. You did not lose $4,000. You missed out on $4,000, sure. But you did not lose $4,000. Already right there, that's the wrong mindset. You're already fucked up. The market did this, the market did that. You're the one who went break even. Now the market came back for it, sure. And then it still went your original direction. So you missed out because you moved your stop. The market had nothing to do with it. The market didn't tell you to move your stop. You told yourself to move the stop for whatever reason. Fear of missing out, fear of losing, fear of whatever the fuck, fear of inadequacy, maybe, whatever. You didn't allow the market to come back for like a lower short and then go lower and then you could have moved your stop. Right? Those are the mistakes. You didn't lose 4,000. So already the mindset was fucked up. And then he said something else I can't remember that was also wrong. I'm like, holy shit, where do I even begin? You said like 3 things that were absolutely wrong, you know? And that's the problem with social media traders, dude. When everybody wants to make content about social media. I mean, sorry, everybody on social media wants to make content about trading, but you're putting out some fucking retarded shit. I don't like that. I don't like that at all. But, you know, who am I? What's the name of the green box on your screen? Well, the green box doesn't mean anything. What I was trying to do was just highlight the highest high and the lowest low between 8:30 and 9 o'clock. It was just a visual representation for the stream, not for me. It was for you. That's what I do it for, baby. I do everything for you. All right. So y'all be good. Be blessed. We'll be here same time, same place on Friday the 18th. Okay, Friday the 18th. I'll put out Thursday's review tomorrow on Thursday, and then we'll be here Friday. All right. So don't do anything stupid. Be blessed. I'll see you then.